as you mentioned, today the market was down by 1.5%. Yesterday it was down by 0.9%. And what we've seen is that generally the banking sector is driving down the performance of the all-share index. And obviously the negative performances is preceded by 6 consecutive days of a rally in the stock market where we saw the market appreciate by around over 8% actually. So basically what we're seeing is a number of investors coming in to take some profit. We've also seen the yields in the fixed income market rise so that there've been a general switchback of assets into fixed income yields, especially in the short end and long end of the fixed income yield curve.
Well, we'll come back to asset allocation in a minute, but what do you think? Do you think investors should continue to hold their breath? Because there was a view that the market should at least stabilize this quarter. How do you see things playing out for the rest of the quarter?
I mean, what we've seen is that in the Nigerian stock market more recently, especially over the last 2 years, we've seen a lot of volatility in the market. We think that volatility is here to stay. When we see rallies that are ongoing for a few days, a number of short-term investors just come in to lock in on their profits. And we generally think that the market performances will continue to remain flat coming into the fourth quarter of 2010. So that, we'll continue to see the market move on a sideways basis. But in terms of the fundamentals and the numbers of most of these companies, the blue chip companies on the exchange, they still continue to offer very good value, especially when you look at a number of these companies relative to other frontier markets. They continue to offer good value, whether you're looking at, projected price earning ratios, projected dividend yields, or the book value of the company. They continue to offer good long-term value for investors so that, I don't believe that investors should be too nervous. I think that this is a normal trend. And I think that the Nigerian market continues to offer long-term value for fundamental investors.
Well, we continue to hear that. But let's look at the catalysts going forward. I mean, you've said that you're anticipating volatility over the short term. But obviously, there are several key developments that will be at play over the next few weeks, possibly months. And we obviously have a forensic audit report coming from the NSC. I think a lot of people are looking out to see the results of that. We have AMCON coming into play. We have bidders for the banks. And we also have, of course, the bank's earnings season, maybe in another 2 or 3 weeks. When you look at all these key developments, I mean, do you consider them more as catalysts over the short term, or do you think these are things that will weigh on the market in the short term?
I think a number of them should be good catalysts for the market. And we can take the first one, which is the earning expectations that we should start to see from banks in the very near future. I believe that the worst is over for most of these banks, and their numbers should continue to show improved efficiency and improved asset quality across board. And I think that is a good development, or that would be a good development for the market once the results start to trickle in, especially for the banks that scaled the CBN and NDIC audit hurdle. We've started to see some resumption in lending activities, albeit it's been extremely slow. But we think that once those numbers start to come down, it should help the performance of the market. The second catalyst that we expect to see is, as you know, the president submitted the names of the proposed board of directors for AMCON to the House of Assembly since August, and the president is still waiting for approval. So we think that once the approval comes through, then obviously those lending activities for AMCON can start to buy over the bad debt of the bad banks, and the lending activities can resume again. And we think that generally this should be pretty good developments for the banks. And obviously, very importantly as well is, once the AMCON, bill or once the members of the board for AMCON have been approved, then we should start to see some M&A activities for most of the bad banks as well. We may see some banks come in to acquire them, and obviously that should help the overall performance of the market. So I think the outlook is generally, positive.
And very quickly, how do you allocate in this environment? You've just noted that fixed income rates are still, we can see in the bond yield side, things are improving. Money market yields are very low. Very quickly, do you buy equities now? Are you aggressive at the current levels?
I think asset allocation is a very interesting discussion point. Generally, what we're seeing is that for companies or equity securities that offer good value, good medium to long-term value, we're continuing to hold on the companies. For the ones that we think that are overvalued or are rich in their valuations, we've downsized some of our holdings in those companies and taken some pretty decent profits. And we would continue to utilize those strategies. Obviously, we are also taking advantage of the rally in the fixed income end of the market, and we've increased our exposure to fixed income securities, especially corporate bonds.